Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen. So we got some really good news. Really, it's all in the title, and pretty much all I have to say is BlackRock. All right, have a nice day. Goodbye, guys. I'm just kidding. I'm kidding. Like what? That's all I have to say. Right? Is black. I gotta be careful of how I say the second word. BlackRock. Okay, that's it. It's easy. Live is done. Have a nice day. Enjoy your richness. See ya. All right, guys. I'm on call out. That's why I'm still up. Just got back. What's going on? Dr. Nilesh Patel is in the house. What's going on? All right, Dr. Patel, I got some exciting news for you. Holy God. This is going to be some good stuff. All right, so TLDR, BlackRock increased their position from, if you look at the original filing back on May 2nd, they increased, they used to have 10 million shares on average, 10.3 million. Well, guess what? They just went ahead and filed a form, which you can see here. They filed this 13G form, and it shows that they just increased their ownership up to 29.8 million. So essentially, they bought 19 million shares. Holy moly, right? So we're going to talk about that, right? But first, before we do that, I want to go ahead and just talk a little bit about what happened. So today, open stock went up really well, and then it ended up falling some. And a lot of folks were arguing yesterday regarding it being up because of fundamentals rather than actually someone tweeting. So what I did is I made a post on Twitter, and it got like 17,000 views. And holy moly, man, I got some people coming out of the woodworks, just insulting me, right? I got to go to my email, but there's some sensitive stuff there. Someone literally said, "I know where you live. You better cover your short or I'm coming for you." I'm like, holy shit. I'm like, you crazy. But I have one here. I took a screenshot of one. I think it was really funny. So there's this guy who messaged, and he said, I'm not going to read this. So like you guys, I'm only going to like read the first word so you guys can see it here. He literally said, at, me, Albert Allen, right? FUB. I know you're short. Start covering, you mother F crook. I'm like, what the hell's wrong with this guy? I'm like, I'm not short. Anywho, because I pay Twitter $1,000, more than $1,000, I get access to special privileges. So I went ahead, and because he clearly violated, because you don't want to piss off people like us. We give money to Twitter, right? Or X, right? You don't want to piss people like us off, right? So he's been banned, right? See ya, right? But I just find this funny because I mentioned this not out of honestly, yes, out of comedy, but I also mentioned it out of something else. So if you don't recall, when SoFi dropped, we made a video, and then people made a lot of money, right? But what I want to talk about SoFi is, look at SoFi now. It's $22. So the last time SoFi was like this, it was literally back in 2021. So the point that I'm trying to communicate to you all is the casino is coming back. Do you guys hear that? Do you guys hear that? What is that? Oh, okay. Yeah. The baboons, the meme folks, they're back. That's it. Do you hear that? Right? So they're coming back. And I just want to, make sure. So we talked about the stock, went up again. We called the stock out when it was $4, and we were like, go heavy on it. And right now it's $24 billion. Okay. So this is $24 billion now, SoFi. And let's example, if SoFi, if Clover was the same market cap, we'll be looking at a $48.84 stock, right? $48 stock for Clover. Now, the reason why I'm saying this is that because now these meme stocks are coming back online, you're getting a lot of people that are like, Like, I guarantee you, if we were out on the street and it was like a brawl, I'm sure this guy would try to basically hurt me. I think he would try to hurt me, guys. I'm fearful. I literally am like, oh my God, this guy's trying to hurt me. But you know, it's whenever you get, it reminds me of that professor. It's a movie called The Wave. If you guys, let me see, The Wave, old movie. It has to do with Hitler. It was an experiment in high school where students learn how easy it is to be seduced by the same social forces which led the horrors of Nazi Germany. And it was crazy because he pretty much had these students, and I think this was based on a real event, but I find it very interesting. I can't even spell Hitler correctly. I guess you can see the full movie here. Huh. But the way he made it, I want to watch this movie again. Is it this one? I'm going to watch this movie again, guys. I'm going to watch it again because it's such a good movie, guys. He like shows the class. He's like, this is who your leader is. And then people got really upset and everything. But it really shows you, it reminds me of like the Stanford the prison system versus the guards. People really become crazy and they become almost like detached from fundamentals. Let me explain. So there's this guy, Shay, and he's telling me all these crazy things, but there's a guy named Shay, and his posts are definitely out there. I mean, they're really out there. He's calling Clover folks crying and all these emotional things and just completely detached from reality. And I just want to point this out because the reason why I'm getting to this is we are getting into the casino now. The casino's turning back on because look at what Shay's saying. So we always talk about fundamentals and data, right? So Shay's saying, open, hold it, folks, help is coming. So he believes that this guy is help. And that is, it's hope, right? It's hopium. And their investment is geared to someone else, right? And mind you, AI has gotten really good. This almost looks like a real photo. You know what I mean? I think it was generated by AI. I'm just very surprised how it was done. Unless maybe it is a real picture and they just edited this. I don't know. It looks like fake a little bit, but still pretty damn good, right? But the point is, this is how their investment is. And this person's logic is insane. So this person said, I have been talking about CLOV for 2 years and CLOV hasn't gone anywhere. Not surprised he is bashing open. If you think this is bashing, talking about the fundamentals, and if you think this is bashing, I get it. Everyone's excited the stock's going up because some guy's pumping it. And I understand that. And it's like, I'm basically going to a high school. This guy's acting like a high schooler, right? And I'm sure his personality between high school, where it is now, hasn't really changed. But it's like basically going to a high school pep rally and then bringing a calculator. No one's going to listen to you. But the problem is, we're talking about money here, guys. We're talking about business. And if you want to act like a high school pep rally, go ahead. You're going to end up getting fleeced by Wall Street. But what I found interesting is he says that I have been, talking about CLOV for 2 years and it hasn't gone anywhere. He literally says it hasn't gone anywhere. And what I find interesting is if you look at from April 19 to July 17, in just 15 months, we're up 376%. And apparently to this gentleman, CLOV hasn't gone anywhere, right? So again, the point is now a lot of people are starting to say, well, Chamath was right. Let's go, Chamath. Chamath, you're the man. And you're starting to see how short-term people are, to where accounts that have over 300,000 subscribers are starting to get on the bandwagon. And it really shows you how short-term people are. The casino always turns back on. People activate the nucleus accumbens of their brain for the reward pathway, and people start gambling. And I'm seeing this. The gambling is about to start. It already started, but it's about to. It hasn't peaked yet because the money market funds have not yet hit the market. And if you think, we got $7 trillion in the market. If you think 7 trillion is going to increase the market by 7 trillion, you are wrong. I can probably increase the market by $1 trillion, maybe by $1 to $2 billion, just to give you perspective. Okay. And it's just, you have to understand the mechanics of how the market works. And if you look at the all-time high right now in the market, we are approaching all-time highs consistently. And guess what? Ethereum is breaking out, and small caps are going to lead. Rate cuts are coming. We're setting ourselves up to where speculation is going to become rampant. And if you go ahead and do intrinsic value graph and look back at everything we've been talking about since day one, if we go ahead and just kind of look at this graph here, and we look at intrinsic value, which is exactly what we calculate here on our intrinsic value calculation software. If we go here, the stock price, doesn't this look like Clover? The stock price was up here. It fell down. Margin of safety. We were saying buy. At least I'm buying, right? Again, not financial advice. This is fear. People are fearful. And this is intrinsic value. What's crazy about Clover is this black line here has kept going up, because Clover is a different company than what it was in 2021, guys. And not a lot of people understand this, right? So what ends up happening now is we're going to get to a point where we are going to get to greed. And there'll be intrinsic value, and we're going to be trading above intrinsic value. Now, instead of selling, what you can do, and now a lot of people say you should sell because, a lot of people tend to hold, and then they end up basically, falling back down below intrinsic value. And that, it ends up basically because they don't want to pay taxes, and it ends up being like you should have just basically sold. But what you can do is activate the wheel strategy, right? So as you guys have seen, I have about 330,000 shares in the public portfolio. Add another 100,000 from Michelle. That's 430,000 shares. Okay. Now let's just use the public portfolio, 300,000 shares. Okay. And we're going to go ahead and we're going to follow this blueprint in basically showcasing where could this go? Because I think this is one of the greatest opportunities that you can have. And the last time I've seen opportunities like this were in the 90s, given my deep research that I've done in the market. It was in the iteration of the computer systems and internet. But now it's the AI infrastructure, which has already been invested in, like NVIDIA, et cetera, Broadcom. Like if you look at AVGO, one of the stocks we talked about before, we called the stock out right around here. It's gone up a lot. We talked about Marvell. We're talking about infrastructure, right? This stock has done really well. It was really well up here, then it basically fell. We talked about, rare earths. Rare earths now are starting to pick back online. A lot of the stocks we called out are basically going, and then if you look at how to find the next 10 bagger, we talked about this. And we're starting to see that these investments are materializing now. And what we're going to start seeing now for Clover is that what we've been banging the drums for, and over 850 videos just analyzing, using our software, showcasing the facts, showcasing that, yes, you can win on Wall Street. From a Main Street side, it is possible. So it's the casino's coming back. SoFi is about to get to new all-time highs soon once we break out of this. And A lot of these other things, you're going to start seeing Clover do the same, right? And there it is, guys. And you're starting to see people, even when the fundamentals are not changing, you're already starting to see people invest in this company in hopes for a pre-anticipation. People are willing. So essentially the argument is, and I agree with the argument is, well, hey, I think there'll be more rate cuts this year, and I'm going to bet that maybe a business turnaround might happen. Still risky, but I'm willing to bet on it. That's if you were to ask, and these speculators, I'm not going to call them investors. They're not investors. They're speculators. If I was going to add, these speculators are okay speculating doing this. So what does that tell you? They're willing to risk money for more risk. And what does that mean? That's trying to generate alpha, which means that it means the discount rate's going down, guys. What does that mean when the discount rate goes down? Right? It means the intrinsic value goes up. Right? You understand what I'm saying, guys? So when does the discount rate try to go down? Is when we start cutting rates. And there's a high probability we're going to be starting cutting rates soon. In fact, if you go ahead and take a look, federal funds rate versus 2-year treasury. Based on this, the 2-year treasury is prognostic of the funds, right? So if we were to go ahead and remove the 30, remove the 3-month, and just focus on this, what you can see, and let's focus on 2020. Oh, that's terrible. That's ugly. Hold on. Let's remove this. Let me teach you some stuff here. Okay, so let's do about 5 years. Okay. So as you can see, the Federal Reserve didn't start increasing until March 2022, right? But if you look at the free market, the treasury yields started going up before the Federal Reserve actually increased rates. So the Federal Reserve already predicted that they were going to increase rates almost pretty much a year before they increased rates. And you could see how you see how like the orange line is always ahead of the blue line, right? So now what are you seeing? You're seeing the orange line start to drop, which is telling you that we are leading into a rate cutting cycle. Okay. So that's going to bring a whole bunch of speculators. It's going to bring a whole bunch of people that are trolls that most likely make under $100,000. They haven't really seen or tasted money, and they don't care. They don't think. They're degenerates, and it's okay. This is good. We need them. These are good people, right? Because what ends up happening is these are the types of people that are going to be basically buying the stock up here. They're going to be buying the stock up here, and they're going to be doing crazy, crazy call options. They're going to be gambling. You're going to have people that have about 2,000, 4,000 shares in Clover at like $25. Let's say 2,500 shares at 25. That's like $62,000 for them. They're going to put it all in there, and they're just going to go in and just go hardcore, and they're going to do call options, and they're just going to lose 20,000 after another. It's going to be an army of idiots putting in $20,000 calls. Boom, 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 and they're going to continue just losing them. And every time we do covered calls and cash secured puts, we're going to be taking that money from them. Okay? We're going to be taking that money. We're going to be milking the shit out of these people, right? It's going to be impressive, right? I'm telling you, this is how Wall Street thinks, okay? We're going to milk the shit out of these people. We're going to milk them so hard that we're going to make our own real estate empire, right? So, so now that we kind of talked about this, let's go ahead and go back to BlackRock, okay? So if you go to Fintel right now, and if you look at Clover, it still shows a 26.41% in ownership. That's not accurate, because if you scroll down, and if you look at the number of shares, and if you look at BlackRock here, it shows BlackRock owning only 10.3 million. Okay. But if you click on this, they don't own 10 million. No, they own actually now 29 million. Why? because they just released this. This is new information. It'll take a couple days for Fintel to update. But you can see now the ownership now is insane. And if you were to look at the history of BlackRock, BlackRock used to own about 27 million shares. We're at a position now where they're owning more than they ever have. Now, if you don't recall, and if you were to look back at what we talked about in regards to institutional ownership, and if we go to utilizing our software, part of the Al Stock Trades platform, again, for folks that are interested and want lifetime access to our software, we're running a special coupon code called SAS, SAAS, which will give you $1,200 off lifetime access. And it'll give you lifetime access to everything we offer, our software, price targets, stocks, really, just people that have a net worth of over $45 million. I mean, it's almost like a country club, and you'll never find a country club that's this wealthy that is charging this much. So if you were to go to Clove now, and if you look at institutional ownership, I told you, and if you look at the past 25 years, obviously it's not 25 years, but just kind of long range, I told you, this is the first time in the history that we've ever seen institutions have this many holders in the history of Clover Health. I showed you this. Our software was able to pick up a change before a change was picked up, right? I told you from day one that this is a change that we've never had before. And what we're starting to see now is you're seeing BlackRock now own Clover more than they ever had in the history of the inception of the company. Okay? So the last time they owned like February 2023, the last time they owned around over 20 million was February 2023. And that was around $1.29. And then they sold. People freaked out. I said it's more likely for taxes. And they said they worked the money somewhere else. And now they came back online. And they really doubled down hardcore. And you could see their average. They were buying the dip heavily. And their average is like actually $4, $3.96, $3.86, $3.89. And then what it ended up doing is they sold. And then they kept on buying. And it's kind of interesting how that works. Their average started going down, and what they did is they sold off their older shares for tax loss and kept their newer shares so they don't get hit by taxes. So they executed this effectively, right? So let's see here. What is it? Let me think here. They increased here. Oh, no. My apologies. Because I didn't say it was $4 here. I read that wrong here. 5 to 24, they increased. Let me double check here. The effective rate was June 30th, 2022. My apologies. June 20th, 2022. So June 20th. So they bought right around at $2.22. Again, right? And then they ended up selling, and then you got this big dip here, right? But now they're buying back. Now, a lot of retail investors are going to say, well, hey, it fell even after they bought before. What happens if they sell? Again, people that ask that don't know what they're talking about, because if they knew what they're talking about, then they would understand that the company became operational cash flow in 2024, free cash flow in 2024. We're saying the same words over and over again, but it's unfortunate because retail investors it doesn't stick because they were pre-programmed to be in the bottom 50%. It is what it is, right? So now we already showed you Carvana, we showed you Palantir, etc. I'm not going to show you that again. For people that have seen it. If you haven't seen it, watch my the previous 5 videos somewhere in there. So the question now is, given this, the stock is about to become financially intrinsic value responsive, right? We've already mentioned that before. So what could be the value? Okay, what could be the value? So let me just kind of go ahead and scroll through here. People are looking at algo flow. Let's look at our algo flow right now. Short volume, people are starting to lower their shorts. But again, algo flow is saying the stock might go down. So algo flow is bearish, but again, difficult to say. We broke out of here, so we're going to see right now if we can kind of be above this descending triangle that we have on the upper end of the triangle. The big thing is we have earnings, and we know from last year, Q2 2024, they were profitable, and there's a high suspicion that I think two things are going to happen. I think they're going to be profitable, number one. And then number two, I think that they're going to end up basically revising earnings, and they're going to end up shooting earnings at a level unseen. And we're going to it's going to be incredibly bullish. The other thing is we have this Humana subdomain, Molina subdomain. So, and they also have this compensation package that they haven't revised. So there's a lot of pieces that need to be sewed together and connected. I'm just going to go ahead and make sure we talked about all this other stuff here. Okay, so we talked about this. So now the question now is, what could be the intrinsic value of this, given that if they do a complete business turnaround? I'm only going to calculate the Medicare Advantage, and then I'm going to do the one for the SaaS business. And we're going to combine both, right? We're going to combine both. So before we do that, let me go ahead and go through the comments here real quick. Let me see if there's any questions. Let me see if there's any questions here. Oh, yeah. Oh, you want to do Monte Carlo? Okay, before we do that, we could do a Monte Carlo. That's good. So to do that, you just got to, analyst reports. You can see, let me just show you the analyst reports real quick though, eh? So here's the analyst reports. In fact, here, let me just kind of restart this here so you guys can see it here. Again, this is all part of lifetime access. There's no platform out there that'll give you lifetime access to data. It's kind of hard to find, right? So here's the price targets from analysts for Clover. You got a $6 price target, 343 is the consensus, 250 is the medium, 180 is the low. That's stupid. That's when Vivek bought, right? So you could see that the high target, and I tend to agree with that one, right? So this is kind of where we're at now. Let's go ahead and generate the report, and let's look at the Monte Carlo. So again, generated today. This again, all included in lifetime access. You also get included with the short information here and all this other stuff. So if you want to look at the short right now for Clove, you look at the time frame, year to date, you can analyze that. All included lifetime access to the platform. You can kind of, again, data, plus the educational platform, et cetera, et cetera. So here's the report. So let's see what it says. So it says 317 in the next 50 days, up 5%. And again, obviously it keeps changing as we get more data. From a technical analysis, there's a lot of damage right now, technically, but fundamentally, it's looking pretty good. Here it is right now. It looks like 299, 301, 293, 287, 330. Yeah, so let's see. Look at here. 299, 272. I'm just looking at all. So yeah, it looks like we could be starting a next new uptrend. Okay. So there's that. Now let's go ahead and look at intrinsics real quick. So it's very tough to determine what could be. I'm going to do something different today. I'm going to see what could be the absolute top of Clover. Now, to do that, you would need to do 80 minus 20. Again, plus 43. And we don't know what net income is going to be. We added 43 because it was negative 43 to 0. But if it's net income positive, let's assume the analyst said 2029, they're 160. Let's just use 160, but I think it's going to come a lot earlier. Okay. So we do 160. I think that'll be fair. You do that, you get a free cash flow of 263. Okay. Now, here's what I'm going to do differently this time. Okay.
263.
I'm going to enter CLOV, right? And then I'm going to enter 263 here, but then I'm going to enter 37%. I'm going to assume they're going to grow 37% for the next 5 years, given that they're going to be on the growth side. Now, if this is the case, we're going to go ahead, and I used a humbling net income. So if we go ahead and do Classics View, we have $17 recession case to $80 best case. I'm going to take $80. Okay. I'm going to take 88. I'm going to take 80. That was not, let me see here. Let me make sure I copy it correctly.
$8.09.
And now we're going to go ahead and calculate. We're going to calculate, this is without SAS, right? We're going to calculate SAS now. Just assuming Medicare Advantage, forget Duke, forget all these other ones. On average, $1.6 billion, right? We're going to make from Humana if we get all of Humana's MA, which is $75 billion. So to show you how I did the math, you take $75 billion. If we can save them 10%, which we know we can save them more than that, we save Humana 7.5. And if we can somehow, and this part is speculation, but if we can, because I don't know how much they're going to take, but if we could take 20% from that, that's 1.5 billion. Now, if you go ahead and take a look at, and again, it's tough because if you look at the price to sales of Palantir's price to sales is higher than this. So I think this will be higher, but I think if you mixed the Medicare Advantage, I would say let's just be humble with SAS. But I think the SAS multiple could be 6.7. That's basically taking all of the SaaS companies, Adobe, Snowflake, all of them, Datadog. And if we put all of the SaaS multiples, you get 6.7x. This is actually using data-driven approaches, right? Of course, if we go to the clown market, then we could definitely see higher. But I think, again, if you're curious to see what price sales of Palantir is, watch. What is the price to sales of PLTR? PLTR price to sales, guys, is 100 I was going to say effing 19. 119. That is insane. Now, could Clover be that? Maybe 25% of it. We may see, 119 times 0.25. We may see 29x. But again, I'm not going to do that because then it's just bullshit. So let's, again, since this is supplied by data, let's apply this by data. So that's 6.7x.
6.7 times.
And this is just for Humana. So Humana is 1.5 times this. So if we do that, we get 10 billion. So 10 billion multiplied by 2 is a $20 stock just from SAS. If we add these together, you get 80, 90, 100. So you get $100 stock. And that's using the SAS multiple of 6.7, right? Assuming that Humana actually materializes and we essentially get up to, 1.5. Now again, for Vivek to smoke his cigar right now and basically look at this big jump of BlackRock coming in, and then he's referencing, because when did Vivek start talking? Let's use more data. So let's go to Vivek. When did Vivek start just being the man? He's always been the man, but I'm just curious. June 14. So that means he probably knew he's seen things. I mean, BlackRock, the effective date here filing is June 30th. So this guy's seen things, and you don't know if BlackRock came to him, and these people talk in the background here, I think, right? Again, you don't know, right? So here's some investors, June 27. So he must know something. Then him basically comparing Waymo and Tesla. A lot's going on, guys. A lot's going on. And, the big thing here for me is it was clearly referencing Clover, because if you look at the gross margins, Clover has that one of the highest. And it's industry leading medical cost ratio. And he pretty much said, hey, if you choose to pass, you're probably a bad investor in general. And he says not doing this is how most investors missed Walmart and Costco. And if you look at Walmart stock, it's 758 billion. If you look at Costco stock, it's 423 billion. And if you look at Andrew Toy, help me find the interview where Andrew Toy from Clover Health stated that this is a $150 billion company. So if we can go ahead and find this, we can go ahead and find this and find the link, and we can go ahead and go to the link, and we can basically say, this is from Andrew Toy, right? This is a huge opportunity to use technology to bring great healthcare to more people. Interview with Clover Health CEO or Clover Health, I think CTO at the time, October 14, 2021. So now let's go back to the 150 billion. So he says, I think people in retail environments support and are willing to believe and bet on a grand plan. They want something audacious, someone who's going out there and saying, and he's who's saying, Andrew's saying, right? He's referencing himself. We're saying we're an incredible $150 billion company. They see Clover as being different, and we are different. That's a great thing, as opposed to when people say, oh, you're just a Medicare Advantage plan. No, we're not. So based off what we calculated, $100 price target, this is around a $50 billion valuation. If we front run this, and if, for example, we get to about 25% of PLTR levels, then you could potentially see 25 multiplied by 1.5, which is 37 times 2, which is $75 stock, plus the 80, that's 155, and that's still $77 billion company. So based off of what we calculated out of data, we calculated a $100 price target. And I would say this is a 10-year price target. It's a long term, proven until otherwise. Okay. And I think it's going to happen way shorter than 10 years, right? Again, the clown market's coming back. Money market fund, $7 trillion about to hit the stock market, right? So based off of this, we're having $100 stock based off of what I'm getting from this data here. And you can go ahead and look at Carvana, look at Palantir, put in all the numbers for Palantir, and you'll see that our calculation is accurate. It's just they need to grow at this free cash flow. Right now they're at 33, technically 80, but they had that ACO, right? But we're getting there. So, you have to ask yourself, why did they buy all of their $18 million in stock buybacks at $3.60? Why do they keep buying treasury stock and not just using cash? Makes sense, right? So they know they're undervalued. CFO Peter said we are undervalued. He references Benjamin Graham in his LinkedIn post. Again, if you pass on this, I wish you, best on your 9 to 5. Okay, so now if you look at this, we're looking at a price of anywhere between Andrew Toy's 150 billion, which is $300 stock price. So if you go on this, you can see the range is $100 to $300. Now the question now is, could it be higher? I don't know, but this is what I'm expecting in the next 10, 15 years. This is what I envision for Clover. Okay. Now again, why are you multiplied by 2? Because if you look at the market cap of Clover, if you look at the market cap of Clover, it's just the way it works out in the math. Not all companies are like this. Please do not do this. This is just for Clover because of the outstanding shares. If you take 1.53 and multiply that by 2, you get 306, which is right around the stock price, $3, right? So it gives you a good average, okay? Plus or minus a couple pennies, okay? So what I'm seeing here now is a potential stock price in the next 15 years, $100 to $300. Now, you guys know, I have about 430,000 shares in total in 2 accounts. I have 300,000 in 1 account. So we're just going to reference this account, which is the public portfolio. So based off of this, $100 multiplied by that, we're looking at $33 million. Okay. If you do the upper bound of what Andrew Torrey's saying, that's $99 million. Okay. Now, if we take the halfway point, which is 150, that's $49 million. Now, let's go ahead and do the halfway point. If I go ahead and start activating the SAS, the covered calls, cash secured puts, and you can do covered calls and cash secured puts in the S&P 500. You could take it out and put in, you could do it in other things, right? So if we go ahead and do that, then we could get, on average, we'll just do 2.5, right? You can make around, well, I'm going to be making around $1.2 million per month. So I'll make about $1.2 million a month. If I multiply that by 12, that's $14 million a year, right? Now, if I pay taxes, I have to pay about 40% taxes. So I'm going to be able to collect 60%. So that's $8.9 million of hardcore cash that I'm going to end up basically keeping for myself. Now, if I do this and if I buy properties in the $400,000 range, that's about 22 properties I get every year. I do this for 10 years. On average, recession is anywhere between 7 to 15 years. But if I do this in 10 years, I'll have 222 properties, which means I'll have about $89 million in properties. But each property, let's say the rent is $1,800, that's about $400,000 a month that I'm making off of properties while still basically holding the stock, right? Given how I'm working this, right? So, but watch this.
222.75.
So let's say we have 227 properties that are $400,000. Obviously, they're going to go up more. Let's say there's a recession. I can pull out 75% of this, which is, I'm not going to be taxed on it because it's debt, right? And then I can go ahead and pretty much basically I can go ahead and essentially take this and invest it in properties that, so when there's a recession, I take this money out and then I go in and I buy stocks that are undervalued, and I could potentially 2 to 3x my money. So if I do this after a recession, then this jumps to $200 million plus the existing housing, which is $89 million. So now we just say 200 plus 89 plus the original 49 from the covered calls. That's about 338. And that's just basically during one recession cycle, right? So again, Smiles here basically saying, man's dreaming too big. I actually am doing this right now with Palantir. I have in total over $15 million. I have the $1 million public portfolio that I'm going to be showcasing. So people that don't believe in this big dream are going to see it in this public portfolio. So there's no confusion and there is no assumptions, right? And you can see from this angle how far the stock went up, and you can look at the premiums of what this pays, right? And you can look at, what I've shown in terms of the real estates that I already have and whatnot. So the thing is, it's not I'm hoping it happens. I'm doing it now, right? I'm doing it now on a 15 mil portfolio, right? I'm already doing it now. What I'm doing is I'm trying to educate you all so you can see that it's done. So the people out there that are little fish, because I used to be a little fish, you can grow up and be in a bigger fish. So, don't try to, you are who you surround yourself with. So if you put yourself in a small lake, you're not going to grow to your potential. I'm just trying to show you how the big dogs think. Okay. Right. And just to be very clear, because we're all driven by data, I would like you to look at Palantir. If you look at our market sentiment intelligence, which is our very own software that we coded and ran the analysis here, you could see smart money turned bullish here. The stock went from 8 to 15 to all the way up to over $150. Okay. Now, if you look at Carvana and use our market sentiment intelligence, you can see the stock was anywhere between 25 to 41, and then it went up all the way past $300. And you could see it takes on average 7 to 8 quarters. Now, what does it say for Clover? Well, for Clover, we're early. You see how there's not a lot of quarters here? You run the analysis, they turn bullish here. So you can imagine what's going to happen in the next 5 years. Okay. And you can hear it from yourself. The platform is full of smart and rich people from all walks of life. That's why I basically have been beating the drums and showcasing you this data, all support. And I get it, Smiles. I get it. You're thinking, let's get past $3 first. When I used to make the, video for, was it for Palantir? Let me see if I can find it. Oh, what have you? I can't see where I put it. When I made the video for Palantir, there were a lot of people that said, man, let's just get to $10, man. Let's get to $10. And let me just show you here. So again, you go here. This was on January 15, 2023, Palantir. Here's January 2023. And then you could see it went up, right? So I get it. There are people out there that don't have growth mindsets, right? And you have to change the way you think. There's a difference between a growth mindset versus a fixed mindset, right? People that are good workers have good fixed mindset, right? I'm giving you something that I'm doing, and I'm doing it now. And this video is probably going to hurt a lot of people's ego as this portfolio goes up a lot. And for the folks that have this visceral response, it's because they have this mindset, which is fine. It is, you can't, these are the people that are in the bottom half of our society that are helping fuel people that are in the top half, which is only few and far between. So they do serve a purpose. We need them. So you should definitely thank them, right? When you go out there, tip them, thank them, just be nice to them, okay? Because we wouldn't be here without them, okay? So, right? So that's it, right? There it is. And yeah, so in terms of the platform, I'm showing you the data. You're seeing that now big money is basically coming online. At the end of the day, you decide if you want to break out of the matrix. You have the data, you have the group, and you have someone who's willing to basically front the cost of lifetime access. We've been in business now, and we're going to be going on soon on our 4th to 5th year, right? It's almost going to be half a decade, right? And you can look at the users and the lifetime access members. We have a retention rate of a 99%, excluding that 1%, which Pro, if you're watching, come back. Pro's taking a break. Come back, right? So we can get to 100% retention, right? So people that are in our platform see the value, and it's very hard to find something like this. To find someone who's obsessive. Our tools are available both on the computer for this one and the intrinsic value, and this one here, and on your cell phone, so you can use it in anywhere in the world. Likewise, you can access over 60 stock markets in over 40 countries. Our software and our data integration is worldwide. Okay. So there's that. Let's see here. There are a ton of retails that owns more than 100K shares. The ones that will 100%, absolutely. Most likely sell first are the small account investors. 100%. That's going to be the small account investors that just, again, they have like 4,000 shares. They're going to basically see like, $40,000. They're like, holy shit, man, that's a lot of money. And they're going to get excited. You know how it is, they're going to get excited. They're going to get maybe $100,000, $200,000. They're going to be like, whoa, it is okay. It's okay. It's fine. It's not a problem. Right? Let's see. Right? We got past 60 cents, Mr. Smiley. 100%. Exactly. Right? Again, it's again, growth mindset versus fixed mindset. Right? All right. I'm fighting. Sleep on hydrocodone, trying to watch your live. Damn, Al, that's dedication. No, I mean, I'm so sorry, man. The day that you got your surgery, man, it happens to happen that you got BlackRock coming in. And it's like, man, you're trying to get some sleep, but you got this BlackRock news. It's like, man, but you can, let that hydrocodone relax you. And you need it, man. Now that, I'm happy that your pain has gone down, buddy. You're doing, this is good, man. This is good. I can only imagine that pain. So I'm very happy. Excellent, man. I think it went well. So there's this. So that's it, guys. Yeah, I mean, that's pretty much it. We did the intrinsic value. Again, I think we're about to approach profitability soon because look at net income. Q1, we lost 19 million, 19.17, but let's just say 19 million. We lost 19 million, guys, right? But then like this year, Q1, we only lost 1.27 million. We lost like $1 million, guys. That's nothing. We are close. Oh my God, we're so close to profitability. It is insane. So I mean, we're there, guys. We are so there. So this is pretty good, guys. I'm very excited to share it with this. Again, I told you guys I had access to the Bloomberg terminal when I first came on YouTube. And the problem is I couldn't like show you guys the data I was seeing and all this stuff. So I was like, you know what, man, I'm going to build this from scratch. So I built it. The whole platform is live, right? We're going to be integrating courses using this to base the videos to basically, so anybody from any walks of life, someone who doesn't even know how to say the stock market is going to become an expert. And someone who's an expert is going to become a master. Okay. So, this is very good, guys. So, again, very quickly, you're looking at Clover with institutional ownership, and you can see that institutional ownership is increasing, right? Now, if you look at open, and it might change based off of, potentially just, algos, but you could see for open door, institutional investors are going down. It looks like a completely different. Let me take a screenshot so people that have short-term memory, they can compare. So let's see how sleek this is, see how fast the data is. So let's go ahead now and let's just take these two screenshots and let's compare. This is Clover. You see how Clover is going up with investor holdings? Open door is going down. You see how there's two different stories happening here? Two different stories. And it all has to relate with the fundamentals. Now, of course, the algos can change things, but you have one company about to turn profitable and the other one that maybe, they're about to be EBITDA profitable for the first time in Q2 from what I've seen, right? So you could see how this data is very powerful. So there it is, guys. There it is. We're on the right path. And for folks out there that this is making sense to, if you want a platform where you have like-minded people, where you wake up at any day of the hour, we have members from all parts of the world active doing research. If you want people to be able to talk to and exchange ideas, to have people that we don't we don't separate the millionaires and the non-millionaires. We put them all in the same area because everyone's willing to help. Because a lot of people that come in our platform came from not much. Why? Because that's the people I am attracting. I'm not attracting folks that came from everything, right? They have too big of an ego to join our platform. Okay. So big congrats to all of you guys. We're getting closer to the mountaintop. Shout out to the 220 people on X that are watching and the 89 people on what you call it, to YouTube, brain fart. So total 314. Excellent. And there it is, guys. Right. So God bless you all. B-Rob, get some sleep. And I'll see you on the next one.